right. Um, Good afternoon. Thank you for joining us for this Credit 101 Lunch and Learn. I'm Tracy Resvani with the Howard County Office of Consumer Protection, and joining us today is Sandy Rain and Emily Hickox from CCCSMD. And before we begin, I want to make sure that folks who may not have heard about our agency are aware about the services that we provide here in Howard County. We are a division of the Howard County Department of Community Resources and Services. And our main mission here is to help resolve disputes between consumers and merchants. And in the process, if the consumer protection laws have been violated, we do also have enforcement authority. We also do a lot of programming on consumer protection rights, responsibilities, and scam avoidance. At this point, I'd like to turn this over to Sandy and Emily and into the core of our program. Take it away, ladies.
Thank you so much, Tracy. Thank you for having us here. There's a lot of times when people think about credit, they try to determine whether or not they need to look at it so many times a year. What is their credit score? So we're going to talk about how credit impacts our financial life, what the different credit types are. How does the scoring actually affect you getting denied or approved for a loan you've applied for? What are the components that make up that credit report? How do we deal with derogatory information? And then if I don't have credit, how can I establish or even rebuild credit? Advance? So the need for credit is dependent on the person. They could need good credit to be able to rent an apartment, have utility services turned on. Sometimes if the score is not acceptable to the utility company, they may have to pay extra deposit or even submit a deposit. They may even have to have someone co-sign with them to have the services turned on because of things that were blemished in their credit report. When we're applying for any kind of insurance, whether it be renters, homeowners, term life, health, then the insurance companies will also determine what our premium would be, and they'll look to see if they would approve us or not for the insurance. Employment, that depends on the state in which you reside for a application for employment. There are some states that do not allow the employers to go ahead and pull the credit report because they do not want the employment decision to be based on what's on the credit report, the credit score, or they don't even want it to be determined to the pay rate for the person. Automobile purchase, homeownership for sure, because they're going to look at our credit reports and scores. When we do an application for homeownership, the lender is going to pull 3 credit reports, the 3 major ones that we'll talk about here in just a few moments. And they're going to look at all 3 of those scores. So it's very important for us to always know what's in our credit report and what our creditors are saying about us, because any negative or blemished information is going to hurt our credit score. So if the information is not true and valid, or it might be not correct for you because you have a difference of a name, like a father and son, junior and senior. I've seen that so many times. So we always have to check to see what's being reported on us to make sure our report is accurate as possible, because that has a bearing on what our score is. Advance. So when we're looking to get a free credit report, and we are allowed one as consumers, we are allowed to get one free credit report every 12 months from each of the 3 major credit bureau agencies that you see on the slide: Equifax, Experian, and TransUnion. The website you see, annualcreditreport.com, is the official website to go to get your credit report. When you go to that website, and there are several out there, when this first came out for us as consumers to use, I got into a website that was incorrect. And at the end, after I already put all my information in, it asked me for a payment. So you need to be very careful about that. That was, thank goodness nothing happened to my information, but I immediately got out of there and deleted my information. And the problem was there was an extra T or extra E after T in credit. But I didn't know I wasn't in the right website until the very end. So make sure that you get into the correct website. But that one you see in front of you is the correct website, annualcreditreport.com. Advance. On this slide, you'll see the three major credit reporting agency information. You've got the website, you've got the 800 numbers there. So you can always go to their home page if you're looking to get information. Also, I want to mention the fact that when we are wanting to get our credit bureau reports, and you go to the home page for Equifax, Experian, or TransUnion, you do have three options. You can do it right online. You can call a phone number that's on the home page. And then if you want to, you can download a PDF requesting credit bureau report form and mail it in. So you do have three options. Sometimes people say they don't like doing online. They're afraid of putting in their information. So you have three options to get that credit report. Advance. So what's actually in your credit report? Well, there's a lot of information. You've got your identity, social security number, date of birth. You always want to check to make sure your name is spelled correctly. It would have present and previous addresses, possibly, present and previous employment information, possibly. The bulk of your information in your credit report is the actual payment history, the trade lines that you have, whether they be closed or whether they be open. And those payment history for the creditors, as they report it to the credit bureau, they're going to signify if you're paying on time, if you've had late payments, if you've gone into collections, if you've had charge off. So they are going to report as they see you have paid them, and whether it's in a satisfactory manner or not. Now, when it comes to revolving and installment loans, revolving debt is your credit card because your balances go up and down as you pay and use. So that's why the credit cards are called revolving debt. And then your installment loans are going to be those loans where your payment is due the same time every month, same date, and your payment amount is going to be the same every month. We have options if we want to pay more on the principal or make extra payments. But if you don't make the minimum payment on either the credit card or your car loan or your mortgage, then they're going to report you late because you didn't make the full payment as agreed upon when you signed the contract. The ratings for those particular creditors, that is going to depend on how you make those payments, because all of that information, which we'll go over shortly here, is indicative of what your mathematical credit score, and it's based on a mathematical model by the three major credit bureau agencies. And when you see your credit score, you will never see all three of them ever be the same for various reasons. Public records, that would include anyone that had tax liens, judgments, if they had filed bankruptcy, if they are past due in paying alimony and or child support, that would show up on that person's particular credit report. Inquiries. There are two kind of inquiries. One is hard and one is called soft. Your hard inquiries are when you officially make an application with a particular creditor, whether it's a credit card, an installment loan, a mortgage loan. So those particular inquiries would have the creditor's name, the month, and the year on your credit report when you applied for credit. And anywhere from 1 to 5 points are deducted every time we make an official application to someone for credit. Now, your soft inquiries, those are inquiries maybe from other creditors, but points are not deducted. Your soft inquiries are you are not applying for credit. Someone can be reviewing your credit, existing creditors, to see and make sure that you're paying your bills on time and in a satisfactory manner. Next. One of the main things to remember about your credit score is the higher the score, the better the rate you're going to get from the creditor, because the less of a risk you are to that particular creditor. And then there's the very opposite. The lower your score, the more of the risk you are to the creditor, and most likely you're going to have a much higher rate. So it really depends on the guidelines of the creditor and where you fall in that scope of the ranges for the credit scores. And so people say, well, what score should I actually strive for? I would strive for 700. Your score ranges from 300 to 850 for a FICO score. And FICO, F-I-C-O, stands for Fair Isaac Corporation. And you want to make sure that you're trying to advance your score to get as high as possible. Because when you do apply for credit with someone, then you're wanting to make sure you get the lowest rate possible so that in their eyes, you are less of a risk to them when they're determining whether to approve or deny you for your application. Next. This particular slide will show you how you can compare saving money and how much of an impact that credit score has on you. So this particular slide is a $20,000 loan over a 5-year period of time. And this is a simple interest rate like installment loan. So if someone's FICO range is 550 to 599, the creditor may offer them 18% because that is a lower credit score. Now, just moving up to someone with 700 to 749, that creditor may offer them 3%. And as you see below those two percentages, a monthly payment is going to vary depending on the rate. So you have a monthly savings at a 3% rate, 508 versus 359. A higher score gives you a lower rate, so you would save around $149 a month. Now, when you look at the overall picture of the 6-year or the 5-year term for 60 months, for the lower score, the person would pay total interest $10,480, and for the much higher score, the person would pay $1,562. So your monthly savings in your payment for a much higher score, because the rate is offered lower to you, you'd save $149. And then over the life of the loan, you would save over $8,900. So that having that picture in front of you gives you a great idea of why your score should be kept as high as possible, because every time we start applying for loans, our score goes down anywhere from 1 to 5 points for each application. That doesn't mean you shouldn't apply for debt, or credit because you are accruing more debt. You just have to have a clear financial picture of what you're able to do. And even if it is stressful on you, you need to remember we're always working in the positive direction. And if you need help and you have challenges, that's when you need to call someone to be able to get back on track with maybe some information about your budget or what you can do. Next. So let's take a look here at the different ranges for the scores and what it actually means to the lender when they're looking at the scores. When they pull our credit report, the first thing they're going to look at is the credit score, and then they're going to review the information in the credit report. So starting from right to left, the 800 plus score, that's an exceptional score. The borrowers would have a much lower interest rate because they are less of a risk. If you're between 740 to 799, that's a very good score. Again, the same applies. You are in a good area for your score, so you would be considered less of a risk to the creditors, and you would be given the best rate. 670 to 739, that is a good score. It's a median range score, and lenders typically look at that score as an acceptable score. You may have had maybe a blemish or two in the past, but that is all behind you and your scores have been increasing. Then the next one is 580 to 669. This is a fair score. This is usually below the national average, and these borrowers sometimes have a more difficult time paying, and if they are approved, then that particular consumer might have to pay an additional fee or a much higher interest rate than someone in the 800 plus category. And then the last one is 579 or lower. This is a poor score. Consumers who fall usually within this range, they have, in the lender's eyes, a poor credit risk, and they may be declined or rejected for the application for whatever credit reason they've applied for. And many of the people that fall within this particular range, they are also going to be required, if they're approved, to put down maybe a deposit or have to pay a fee to get a credit card or even have home utility services turned on. The risk to the lender is very high, and about 61% of the consumers with credit scores of 579 and lower, they're likely to become delinquent. So that's why the creditors are very cautious in determining whether to approve someone in this particular range. Next. A lot of times people think that the credit score is just numbers that are made up, and that is not true. There is what we call a mathematical model for scoring that's used by all three credit bureau agencies that we reviewed earlier. So you have 5 components here, and they all add up, as you see, to equal 100%. The first one, just so you'll know, that score that we have assigned to us based on the information in our credit report, it's a number that actually summarizes a consumer's credit risk to a lender. And that's based on that snapshot of their profile on the day the credit report is pulled and ordered. So if someone pulled my credit report today and then they pulled it 2 days later, my score could be totally different. Information could have been reported that could be negative, or I could have had accounts paid off. There takes a period of time for that scoring model to take place, but that's what the score is all about. It's giving information, a snapshot picture of how we pay our bills and take care of our finances. They look at the total profile in your credit report of your trade lines and how you're paying to determine that risk to get you approved or not. Your credit score can also have impacts on whether you're approved for additional credit down the road. If you ask for an increase in your, say, your revolving credit line, or you want to refinance your car or your mortgage, it's going to depend also on the interest rate that's charged for credit by the creditor. Approval on a rental application, utility deposit requirements, and then an evaluation of your credit for existing accounts that's going to determine. They don't go in and lower our rates, but they will go in and they can close our accounts, they being the creditor, like on a credit card. They can close our accounts if our score falls below what their guidelines are, but they can also increase our rate if we have fallen below what their guidelines are. I had someone speak to me just last week, and they had a credit card closed and they didn't understand. And the reason it was closed is because their score, they had been doing other things for credit, refinancing, things like that, and their score went down. So because the score went down, it was to an unacceptable score per this credit card company. So they automatically closed that person's credit card. It was for a furniture store, so the person wasn't upset. But this is how scores can impact the credit that we have. So let's go into these 5 components. 30% amounts owed. How much do you owe? The main thing to look at is, say, credit cards. If your limit is $1,000 on the credit card and your balance is $500, you are at what we call a 50% credit utilization rate. That means you have used up 50% of what your credit card limit is. So if you hear the term credit utilization rate, that's what they're talking about. One of the fastest ways to improve someone's score is also to reduce the balances or pay off your credit cards. When we have installment loans, student loans, mortgages, where we have a set monthly payment, every month that payment is made, the balance goes down, because if you have a 60-month term on a car, the first 30 months of that payment is mostly interest and very little principal. Then when you get into the second half of the term, the second 30 months, then you're going to see a reversal. It's going to consist mostly of principal and very little interest. So your balance will go down, and every time you pull your credit report, you will see those balances go down. But when you deal with revolving credit, then it's a balance that fluctuates up and down as you use it. So you could have a balance 0 for 2 months, the holidays or something comes up, and you're going to use it. As long as you pay it off every month, then you're back to 0. If you do not pay it off every month, credit cards are compounded interest. So that means that what you're doing is you're carrying forward a balance and you're paying interest on interest and principal until you pay it off. And a lot of times people don't understand that if they buy something on sale and they're like, I've got to have it, it's on sale, I'm saving 90%. They put it on a card, and then what happens next month, they can't pay it off like they thought they could. And then they're paying interest on interest for them every month they carry that balance forward. So you have to be aware of that. So that sale item is really not much of a sale item anymore because it depends on how long it's actually going to take them to pay it off now. So that's 30%. The largest one is 35%, and that's your payment history. So already we have 65% going there. Payment history is how have you paid your past accounts? Are you paying in a satisfactory manner? Do you have any late fees? Do you have any collections or charge-offs? So everything that we have is a part of that payment history. Medical collections, your mortgage payments, your car loans, your credit cards, anything at all that you're making payments on is comprised of that 35%. So the more we pay in a satisfactory manner, the more we get of that 35% for that scoring model. Going to the left, 10%, new credit. How much of available credit do you have? So that actually goes into the inquiries that I spoke about earlier. Every time you have an inquiry into your credit, 1 to 5 points are deducted, but also your credit inquiries stay on your credit report for 2 years, and then they should automatically fall off. If you ever see your credit report and you see something under the inquiry, which is towards the back of your credit report, and it's well past 2 years, this is something you can dispute, and you can do this right online because it's blatantly right in front of the credit bureau when they check your credit report, and they will see that it's over the 2-year period, and that would be your reason. It's past the 2-year period of time when it should have fallen off. And that's 10%. The next 10% is types of credit used. This is only FYI because we don't want everybody to think that you have to go out and you have to have one of everything. I have to have a car loan, a mortgage loan, a student loan, unsecured debt, credit cards. That's not what we're saying. What we're giving you information on is the different mixture of cards or retail credit or student loans or mortgages that you have. The variance there is giving you more of the 10%, that which is the highest percentage for types of credit, because the lenders look at that as being a positive because you have different amounts that are due every month. They're due at different times of the month, and they're different kinds of loans. And then your last one is 15%, and that's your length of credit history. The longer someone's been in the credit bureau system, the longer they've had credit. Someone that just maybe got out of high school or went into college, maybe they applied for a gas credit card, something like that, then they have one piece of credit. Their score may not be as high as someone else that has paid all their debt on time, no blemishes whatsoever. But even someone with only a couple of credit pieces in their credit report, they could possibly have a higher score than someone that's been there in the credit bureau for a long period of time, but they have lots of blemishes or collections or charge-off. So it's all about how we handle our credit accounts in a satisfactory manner. So that's your 100%, and those are the 5 components that make up your credit scoring model by all 3 of the credit bureau agencies. Next. So I've gone over the hard pull and the soft pull. The only other thing I wanted to say about the soft pull is that could be insurance companies pulling your credit. You're not applying for credit with them, but it's a soft pull, so no points are deducted. If you if someone lived in a state where they did pull credit reports for, offering someone an employment. I know Maryland, they do not, but if the state does, I'm in Florida, so they pull them here for most jobs and also your background checks as well. But if they do, they have to disclose that to you through an application on a paragraph or an addendum, but no points are deducted. Just such as even calling CCCSMD to go over anything. That's a soft pull. You're not applying for credit with us or any counseling agency, so no points are deducted. And also, when we pull our own credit report, no matter how many times we do it, it's considered one to be available to us without point deduction. Do they appear on the credit report? Yes. Remember I said they're towards the back end of your credit report, and those inquiries will stay on your credit report for 2 years, and then they will fall off, or you must dispute them to get them off. Next. On this particular slide, we just wanted to show you how much of a negative impact your blemished or negative information shows when it is on your credit report. It could be anywhere from 7 years up to 15 years. There are different statutes by state of when things will fall off, but I will tell you that even if they fall off the credit report, you as a consumer, you are still legally obligated to pay that debt unless it was paid in full, settled for a different amount, or if it was included in a bankruptcy. So this is just information for someone to have about the different types of derogative information. Next. When we dispute items in our credit report, it's not like, oh my gosh, my score is going to improve because I got rid of those things that was incorrect or wrong, or maybe it was supposed to be my father's, information. It was on my report. That doesn't happen. What you need to do is take advantage of getting your credit reports. Now, remember I said you could get your credit reports once every 12 months, so you do not have to stick to a calendar year. A lot of people, if they haven't seen their credit reports, they will pull all three, and then after that 12 months, they will stagger them. Then you can see one sooner than later. So I might pull one in January for Experian, 4 months later do Experian, and then 4 months after that pull TransUnion. So I'm pulling one every 4 months, and then I start all over again. So if there's anything in there that is incorrect, I'm going to see it. And most likely the same blemished information will most likely show on the other two credit reports as well. Again, remember, until December of 2023, because of COVID, we still have our opportunities to pull our credit report weekly until the end of December of this year from all three credit bureau agencies if we want at no charge. Some people say, I'm not going to pull it every week. You may want to pull it quarterly, every 2 months, especially if someone's paying off debt, getting prepared to refinance a car, buy a home, just various different things. So you can keep an eye on what's being reported to make sure it's showing paid off. And maybe you're working on paying off debt. They don't give us our credit score yet. Hopefully one day they will, but you can always purchase it on the annual credit report website. How do you dispute the errors? You can do it online, or you can go to their website and there is a form, a dispute form. You can download it, print it, write your information in on what you're disputing from the credit report you reviewed, and you can mail it in. But if you go to the home page online and dispute, you would look for the words dispute, make a dispute, start a dispute. And if you do it online, they're going to answer back to you online. If you mail in the form, then they're going to answer back to you by mail. So the next step would be, deciding what you want to do. Are you going to dispute online, print the form and mail it in? And then there's a 30-day period of time that you wait, and hopefully they will have an answer back to you. Either they'll need more information, or that it will be found out from the creditor that you are correct, and those credit reporting agencies will send you a corrected report with that good and valid new information. Or they will say, I'm sorry, everything is valid as is by the creditor. Because the credit bureau, they hold the information on us as individuals. It's like a library, and we're the books in the library. So when they need information on me, they submit my name and my social. Credit bureau gives them the information to review. And the same goes true for when they pull our credit report, and the credit bureau gives them information that's noted for us with our name and our social. Next. When we're establishing credit, one of the best things to do is a lot of people will actually look for a secured card. We can move forward to the next slide. Because a lot of people are looking to reestablish or establish. If someone has no credit history, that's okay, because a lot of bad credit is worse than no credit, because we can establish credit. Having a banking relationship, your savings and checking accounts are not reported to the credit bureau unless you owe them money and the account is closed. A lot of people, like I said, they will apply for a secured credit card. And what that is simply opening up a savings account at your financial institution of choice, putting, say, $300, so get maybe the minimum, put $300 in a savings. If they have secured credit cards, apply for a credit card, and it would be for $300, because the money in your savings account is what we call liquid collateral for the card. If someone defaults on making their payments on the card, they get past due, things like that start happening, then the bank has authority to take the money out of your savings to pay the credit card. So that's one of the ways for someone to start establishing credit with that secured card. Some of them apply for department store cards or gas cards. Some people may have a cosigner, like a child and a parent. Maybe the parent would cosign for the child. Every cosigner is just as responsible as the primary person on that loan, whether it be a credit card or a car loan. So the cosigner is saying, if the primary person doesn't pay, I'm standing up and I'll make the payment. And then your authorized user, a lot of times credit cards will offer cards to someone. If you want to put on an authorized user, you have to make sure the credit card company are they reporting the credit on the authorized user under the authorized user's name? Are they making that authorized user responsible for the payment as well? Next. So wrapping up, here are some of the main points that you would want to consider. Regularly pull that credit report at least once every 12 months, but until the end of this year, you can do it on a weekly basis, or not have to wait 12 months. And that is from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion. Always pay your bills on time. Some people say, well, I have a grace period. Okay, you have a grace period, but save yourself some money and try to make that payment within the grace period so you don't have to pay a late fee. Anything past due 30 days or more from the due date is going to be reported by that creditor to the credit bureau agency on your report. And then that will start to lower your credit score because you're past due. And by the way, your points come back, especially when inquiries happen on your credit report. It just takes a period of time, and any blemishes, if you've taken care of, that's a passage of time as well. Keeping your balances under 30% of their credit limit, that would be what you would want to strive for. First of all, people sometimes strive for 50%, but 30% or below. And when a lot of times people say, well, I just paid my credit card balance off, that doesn't close the credit card. If you were looking to close the credit card, you actually have to notify the credit card company, because your cards can go up and down depending on how you use them, from 0 to 500. Limit your inquiries and beware of those automatic repeated inquiries. When we talk about the inquiries, remember, those inquiries that are hard hit is anywhere from 1 to 5 points. So you want to limit those. And because I'll say 3 or 4 in a short period of time is a red flag to a lender. What is this consumer trying to do? Because they've applied for this many cards or this much credit. Dispute inaccuracies, always, that keeps your score down, and they don't do a rescore on it. So you want to make sure you address any problems that are incorrect or not yours immediately when you find out. Don't let your bills go to collections. I worked with someone one time and they had a $55 charge off from a particular company that they thought they paid the debt, and they never got notices, bills, or anything like that. And then they didn't know until they applied for a mortgage loan. So of course they took care of it because they didn't want that to hinder them not getting approved. But this is why we always want to urge you to check your credit report. And then if you need help and you get overwhelmed with emergencies or things that have come up, there are, agencies that can refer you to resources that you can utilize. You can reach out to agencies such as ours, and we can come up with a budget plan for you. But you have to take into consideration all these things so you that have a very clear financial picture of what's in your credit report and what the creditors are saying about you. And if you follow these tips, then you'll be well on your way. Next. So Consumer Credit Counseling Service, we are available to you as a nonprofit agency. Our website is www.cccsmd.org, and our phone number 1-800-642-2227. And we are proud to say that we also have an online counseling service available to people as well. So I would encourage you, if you need any kind of assistance in buying a home, we're not able to help you monetarily, but we do the HUD 8-hour classes, and we will help you in any way possible. And you would have all of that information right in front of you when you visit our website. Thank you.
Very much for that amazing and informative program. This would be a good time for questions if our guests and participants have any questions. I will lead off with one that I thought would be interesting. Is FICO the only brand of credit report that's out there, or would we as consumers run into other brands and other types of credit scores?
There are other ones like Advantage, you might have heard of those, but a lot of your major lenders, you know, for mortgages and things like that, they're still using FICO. They're not using the Advantage score. And the Advantage score is a little bit more complex than just a FICO score based on that mathematical percentages that I reviewed with you. So I always tell people some of your credit card companies do use that score Advantage, and they will average out different things, and the model is a little bit different than the FICO score. There are different agencies that you can pull your credit report on that people are probably even thinking about. Credit Karma, credit.com. They do give you your score, and they will give you information on the credit report, but I would suggest only using those as temperature check guidelines, because that score is based only on how often the information is received by them. And that score could be 20, I've seen some of them 30 points apart, you know, versus a FICO score. So you just have to be careful, but they're free, and it's just what I consider a temperature check for you.
Are there any questions from our attendees? You can raise your hand or put them in the chat box. Okay, well, it looks like your program was very informative. Again, I want to thank CC, CSMD, Sandy Rains, and Emily Hickox for this really terrific program. It is being recorded, and it will be available on our playlist, which will be found at HOCO Community. And for those who registered, I will send a link when it becomes available. Thank you again. And at this point, I will stop sharing and stop the recording.
Mm-hmm.